So let's talk about indices now. Let's go right down to here. So indices, what are indices and how do we trade them? What are the biggest ones? What are they all about? Let's talk about this. So an index is really just a basket of stocks from a specific country. Well, okay, not necessarily for a specific country, but in these examples, it will be. So we have a group of stocks. Now they're weighted according to, depending on the index. Some indexes or indices, should I say, have a weighting by market cap. So the bigger valuation of the company, they have more weighting on the index, so they will move that index more. So you've got 100 stocks in index, one of them may well have 10% weighting, so it causes much more of a move than something that's, you know, right just about in the index, and if that moves 10%, it's not going to do anything to the index. You've got others that are weighted by price. It just depends on what you're trading, and my recommendation is once you've chosen one, just spend a few hours researching the constituents, the sectors that are in there, the type of market, the type of companies that are in there, the volatility of the companies, perhaps a little bit about the news flow, and then forget about it. You don't need to do that every day before you're trading. But let's say you're trading the Dow. In fact, let's put some markets up here. So we've got the Dow, we've got the DAX. Just an example here, guys. We've got the CAC, and we've got the FTSE. Now, the Dow is 30 stocks, the DAX is 30 stocks, the CAC is 40 stocks, the FTSE is 100, and let's just put another one in for luck. The S&P is 500 stocks. So these are just some of the big indices or indexes we've got out there, whatever you want to call them. The Dow is 30 stocks of the biggest, kind of longest lasting stocks we have in the US. Some people say it's a bit of an outdated index. However, from a trading perspective, it's quite a good benchmark to use. It's quite a good trading vehicle. It can be quite volatile at times, but you know, it's a good one to trade. The spreads are tight for us in the UK, and of course, if we're trading via a CFD or if we're trading via a spread bet, it's fine because the spreads are tight and it's very liquid, so it's really cheap for us to trade. A good one to trade. Then we have the S&P 500. By the way, this is the US, if I didn't mention that. Hopefully, I think you guys probably know that, but it's the US market, and it's telling you, ultimately, it's a bit of a barometer of the US, corporate environment, commercial environment, if you like. If these markets are at all-time highs, business is doing well, earnings are coming in good, they're expecting to grow, they're making money, everyone is kind of happy and it's working well, shareholders are making money, all that kind of stuff. So DAX 30 is 30 stocks in the German market. CAC is in the French market, 40 stocks in the France, and the FTSE 100 obviously is UK. So what are the differences between all these and how they operate? Now, going back to the original point, if you're going to trade these, my advice is really to, understand a little bit about what is in them. You don't have to over-analyze. They're not saying analyze 500 companies if you're trading S&P 500. However, if you're trading something, it makes sense to see what is the overall weighting of that. Has it got a lot of tech in it? Has it got a lot of finance in it? Has it got a lot of utilities, telecoms? What is the overall mix? What is of the biggest weighted stocks? Are they banks? Are they, energy companies? What are they? And then kind of just understanding what you're trading, really. You don't have to go into too much depth about it. But I think it's important to know, because when you are trading perhaps, one of these, and you see that in the news, finance stocks are getting hit, and a specific index has very high weighting on finance, then you are going to know that perhaps that index is going to be hit. And then you can trade it accordingly. I'm not going to talk about setups so much here, but let's talk about these from a trading perspective. Dow is a very, very tight spread, great one to trade, great one to get involved in, good one to start off with. S&P 500, the spread is again quite tight. However, because it doesn't move so much, the spread relative to the daily range is normally a little bit higher. So from a day trading perspective, and I'm being very broad here, it depends on the environment you're in, depends on what you're trading, the strategy you're trading. But generally speaking, because it trades in quarter point increments in the futures market, and then the CFDs are generally priced similarly, The actual tick value, a tick per range value for trading intraday, you get better bang for your buck, if you like, if you're trading the Dow. It's just my opinion on it. If you're swing trading it, it doesn't matter. Obviously, you're trading two different things here, so you've got to understand that the volatility is going to be different in different environments, but that's generally how I would look at it. Now look at the DAX. The DAX is an absolute beast to trade. It's a monster. At times, this thing will just swing wildly. I don't know why specifically that is. I've got a feeling it's to do with the high tick value in the futures market. You're looking at $25 per point move for one contract. 25 euros, sorry, not dollars, for one contract. So, you know, even if you're a small trader, that is going to sting. If you've got a 100-point daily range, you're looking at $2,500 euro daily range, which is why obviously CFDs are so useful, because you don't have to do 25 if you're a small account, or if you're learning, you can go right down to a small amount and you don't have to stomach that full massive €2,500 swing if you're just starting out. Because if you're just starting out, no matter what you've got in your account, you don't want to be having that kind of swing, understandably. So that's a really good one, and it's very volatile. It's one of my favorite markets to trade. I love the DAX because it just swings about. It kind of moves in the way that I prefer to trade intraday. It gives you those regular runs as well if you're a swing trader, so you can grab hold of those big moves as well. It's just a nice market to trade. One of my favorites. I'm a little bit biased if I talk about these. CAC is really, I've never traded this one very much at all. I've placed a couple of trades on it generally when I've been pair trading the DAX against the CAC many years ago this now. But ultimately it kind of follows the DAX a lot more. It's a little bit more of in the shadow of the DAX. The companies are a little bit less well known. Okay, some big boys in there, of course. France have got some very big companies. I'm not saying that they haven't, but from a trading perspective, the DAX is a kind of better trading vehicle in my opinion. You may prefer the CAC because it's a little bit slower, a little bit more of a chugging thing. The spreads are a little bit wider, relatively speaking. DAX is, again, really good bang for your buck, to use that phrase again, because you get so much volatility, so much move, and the spreads are so tight. If you're day trading it, if you're swing trading it, you're getting great value because you're not really paying much to trade. You're paying a tick, whatever it may be, and the thing will be moving 100, 200 in a day. So really, really cheap, really good value from a trader's perspective. FTSE 100, we know what that is, UK company. You might be more familiar and you might want to trade that because you understand the market a little bit better. You feel that you have a bit of affinity with some of the constituents. If you're living in the UK and watching this, or if you're living in other countries, you might want to trade the country that you're in. Of course, that makes perfect sense. But I think that could be a trap that you can fall into if you're not careful. You might think you know about Marks and Spencer's or about JD Sports, whatever it may be, and you think that you've got a bit more of a handle on it, but ultimately, the market decides, the chart decides, other participants decide. So this is a good one to trade. Again, the spreads are very, very tight. It's not as volatile in my experience as the DAX, and this will go from, this goes in phases, guys. Sometimes it will be volatile. We had a phase years ago. I remember if you were trading years ago when the mining companies were in the FTSE and the miners were just going absolutely ballistic. It was an amazing index to trade then. Then it calms down a bit. It just goes in swings and roundabouts. So it's having this kind of go-to ways that you can go and say, listen, America's getting a little bit fruity at the moment. Let me trade the Dow, let me trade the NASDAQ. Tech's going crazy or tech's crashing. Let me go to the NASDAQ and get involved in that, get some shorts on that. Let me go to the DAX because the DAX is very, very sensitive at the moment to Euro, or France have got the elections, let me move to the CAC, or Italy have a big crisis coming out, let me trade short. You can move to whichever one you want. So the important thing to remember though, when you're trading indices, you're trading a basket of stocks. You're generally trading the commercial environment of that currency, a little bit different of that country, sorry, a little bit different from your currencies, because you're trading a little bit more of a real economic environment as opposed to a basket of stocks. At the end of the day, if these 30 stocks in here were doing absolutely brilliantly, and perhaps they were doing a lot of international trade, they would be a lot more insulated from the internal problems or the internal issues of the country if they're doing a lot of international trade. So it's something to bear in mind without going too in depth and complicated about this unnecessarily. At the end of the day, we need to keep it simple. There's no point over analyzing stuff, as we've talked about before. So indices are a great one to trade, really good. Same with the currencies. These two, cut your teeth on them if you're new to trading. These are a great place to start. DAX has been very, very good to me over the years. It's one of my favorite markets to trade, just because it suits me. We'll talk about suiting and how you pick a market a little bit later, suiting your personality, the time you've got, your bankroll, all those kind of things later. But for now, those are some of the big indices worth looking at, good ones to trade.